Hello, in this video we're going to walk through short exercise 7-6 and we're going to compute depreciation. And the thing that's different about this exercise versus other ones may be that this one has partial year depreciation. So we don't have a full year, so we'll have to adjust for that. So let's get started. Assume that on September 30th, 2014, an airline purchased a jumbo aircraft at a cost of 41 euros. The airline expects the plane to remain useful for 4 years or 5,200,000 miles and have a residual value of 5,200,000 euros. The airline will fly the plane 390,000 miles during the remainder of 2013. Compute the depreciation on the plane for the year ended December 31st, 2013 using the following methods. Okay, so we're talking about an aircraft that we purchased September 30th and the year end is December 31. So when we look at that, we think this company will only have owned the airline for October, November, and December, 3 months out of the year. So the first method that they're asking for is straight line method. So straight line method, when we do that, what we do is we take the cost minus the residual value and divide it by the useful life. And then we're going to adjust for how much of the year we owned it. So what we're doing for a straight line is we take the cost of 41 million euros minus the residual value of 5,200,000. Then we divide that by 4 years. So that's our annual depreciation, but then we need to multiply it by 3 months divided by 12. 3 months is the number of months that the airline owned this aircraft in 2013. Since they bought it September 30th, they would have owned it October, November, December, so 3 months out of 12. So we get straight line depreciation for the first year of 2,237,500. Next up, units of production method. Now, units of production method, what we have to do is we have to figure out let me just show you the calculation. Okay, so here we're going to take the 41 million cost minus the 5,200,000 residual value and divide by 5,200,000, which is the total life in miles, and then we multiply by the 390,000 miles actually flown in 2013. So it's actually in the period October through December, it was flown 390,000 miles. So that'll give us 2,685,000. Now, if you round your depreciation per unit, you'll get 2,683,200. So somewhere in there, there's a little bit of rounding going on there. So there are two possible answers depending on where you rounded it. When you're doing your homework, follow the rounding instructions in My Accounting Lab. And then that 2,683,200 that I referred to there, that's $6.88 per mile times 390,000 miles. Okay, so that is what you get if you round the miles to 6.88. So if you calculate this is actually 6.8 something. So if you round it to the 6.88, you are going to get a little bit of rounding error. The 2,685,000 is if you just do that first calculation that's listed there, the 41 million minus the 5,200,000 divided by 5,200,000 times the 390,000 miles. Okay, so that's units of production. Next up is the double declining balance method. Now, the double declining balance method, what we're going to do here is we will have to take the cost of 41 million euros times the double declining balance factor. The factor will always be 2 divided by the life, which is 4 years. So what we have here is 41 million cost times 2 divided by the number of years, which is 4. And then we have to make the adjustment for the partial year. Remember, we only own this airplane October, November, and December, so 3 months out of 12. So we have to make that adjustment. So under double declining balance method, we get depreciation of 5,125,000. Now, there are two questions now that we can answer. Which method would produce the highest net income for 2013? Well, the method that produces the highest net income is the one that has the lowest depreciation. So that's going to be straight line. And then which method produces the lowest net income? That method will be the one that has the highest depreciation. The highest depreciation is that double declining balance method, since it has the highest depreciation of the three methods in this problem. And that's an accelerated method, and we would expect to see that. So that's it for short exercise 7-6.